I try to get through professional skepticism today. And on Thursday, Denise is going to come back and walk through IDEA, give you the IDEA tutorial. So what's really important is that you have IDEA uploaded on your laptop. I sent out a couple of additional files, the accounts payable supplier file and an accounts payable text file. And you're going to need to save that in My Documents. You can save it in your My IDEA documents, whatever, because you're going to have to upload those files once you have IDEA on your laptop. And you can't, because there's a problem with one of the files, you can't save it from Blackboard. I have it on Blackboard, but for some reason it's not allowing you to save it into your documents. So that's why I sent out the email with the files attached. So it's really, really important to have it. If you're having any problems downloading it, please let me know before class so that we can try to resolve it. So that when you come to class, we can hit the ground running and she can walk you through some steps to analyze data and explain what each of those functions allows you to do as an auditor. Okay? So has anyone, I know one person contacted me because they were mad. Were you able to find out any information about partitioning? You do. You can't, and that's the key. If you have Apple, you're not going to be able to download it unless you partition your hard drive to run Windows operating system. Okay, so unfortunately, IDEA does not work on an Apple operating system. They don't have that. I don't know if they will. So you're going to have to partition. Or if that's a problem for you, then hopefully you're not partnered up with someone who also has that. But most of you seem to have that too. So we're looking into whether or not we can get it on. We know that it was on the computers downstairs on the first floor, but that was last summer, over the summer, so I'm not sure that it's still loaded there, but Denise and I will check into it. No, yeah, the workbook is based on 9, which is fine. You'll be able to do everything on 9. 10 just because there are some different functionalities and better, but it won't prevent you from, you don't have 10, it's not a big deal. Okay, as long as you have it working, yes.
There is an ACL CD that comes with the book.
No, the software, the files, is on the textbook website. If you click under Student Edition on the Lowers textbook website, the link to the website is in the syllabus.
So we can use it IDEA or ACL?
No, you have to use IDEA. It has to be IDEA. The workbook for IDEA, you can download it from the textbook, the website of the textbook, but I've also uploaded the workbook in up to Blackboard, so it's in the folder for IDEA. And the workbook is excellent in terms of walking you through the steps, in terms of uploading it, and whatever questions you could have. And the workbook is what you're going to utilize for your project. Any questions? Okay. So let's talk about professional skepticism. So professional skepticism, what you will realize is that I will refer to this quite often throughout this semester because it's such an important concept in terms of auditing. And as you approach working on your group cases, the individual cases, it's going to be important for you to kind of utilize skepticism as you're doing that. So I expect you to kind of bring that skeptical attitude to how you evaluate cases that we're going to cover in class. If you recall, when we talked about the judgment framework, the professional judgment framework, we talked about professional skepticism there as well. Right? So what the case that we're going to go over today is going to highlight how auditors can bring professional skepticism to bear in an audit environment. So generally when we talk about professional skepticism, a very basic definition, and a well-used definition, is an assessment or an attitude that includes a questioning mind. So remember earlier when we started this semester, I talked about auditors should trust but verify. And you can have this unconditional trust in your client, but you can't go into your client and assume that they're committing some type of fraud. So you want to make a critical assessment of the audit evidence. So, what do you think? What's a word that jumps out at you that says that should be, that's characteristic of professional skepticism? Oh gosh, when a partner reviews your work papers and asks you questions, he tends or she tends to want you to respond. So remember in auditing, right, if we come up with a judgment, we have to be able to support that judgment. So B, who selected B? So nobody thinks it's B then? Yes, no? Do you need coffee?
I think it's B because it seems like it's not thinking the other side of it. It's just exclusively capacity on it.
Right, which is not really saying anything, right? And auditors audit, right? They audit financial statements. So B is not telling you anything about professional skepticism. It's just saying that auditors act exclusively in the capacity of an auditor as when they audit financial statements. Woohoo! That's common knowledge, right? It doesn't say anything about professional skepticism. What about C? Who said C? Nobody? Yes? No? D. Okay, financial statements.
You have to check your work, so if you will check their work, so it's not verifiable, then it's not true, so you're professionally skeptical. How do you check that?
So if you can't verify, you're saying that you should be skeptical.
Yeah.
Well, if you can't, right? Well, you could, but if you can't verify the information, then you can't get an opinion on it either, right? So that the expectation is that you do verify it. So if you haven't figured it out by now, the answer is A, right? And as Casey explained, there's always this conflict. Remember when we talked about, so the important thing is, remember I said you can't check financial accounting at the door? Well, you can't check the concepts that we covered already at the door because it's building. So remember when we talked about professional judgment, right? We talked about those types of, those factors that can impede an auditor's professional judgment. Time pressure, relationships with the client. And so those types of factors also have an impact on your professional skepticism as well. So because you form relationships with the client, as Casey pointed out, you know, the client pays you, you want to keep the client, and so you have to guard against your relationship or your incentives to retain that client, guard against those impeding your professional judgment. So that you, again, approach the client not with, just trusting them unconditionally, but also being aware of the fact that there could be incentives for the client to want to manipulate the financial statements, and be aware of what those incentives are, what factors could give rise to those incentives. So the correct answer here is A. So what do you think the answer is to this question? Actually see it gets to how professional skepticism has been, or skepticism has been measured in research, right, using a trust scale. Because there's a correlation between people who are very trusting versus, and being skeptical, and people who are, not trusting. People who are not trusting tend to be skeptical. And think about, and we're not going to talk about at this point anyway, whether or not, because your skepticism will differ based on context, right? So you might, we might already go in with the mindset, I always use this example, of a car dealer, right? When we're approaching a car dealer, we might have that mindset, we don't trust them because, stories and maybe prior experiences, that you can't trust them. They're going to try to sell you this car at the highest price, right? And so they're going to tell you all types of things. So you're skeptical going in. So your skepticism can be context specific, but in an audit context, what you want to think about, you do want to trust but verify, because you don't want to go in and say of your client that you're dishonest if you don't have factors. And that's not, let's not forget, auditing is a business, right? You're trying to retain a client and you want to provide a service to your client. So you're not going to just walk in and assume that the client is untrustworthy. But the reason for C is because that's the way that it's been measured in the literature. People who are distrusting tend to be more skeptical based on research. Okay, so it is all of the above. You want to defer and think about some of these things when we're talking about the judgment framework, right? Suspend judgment. So defer your conclusion until the evidence provides you sufficient support, because you have to be able to support the conclusion that you make or the opinion that you give on the financial statements. It has to be supported by the evidence. So you want to critically assess the audit evidence. So professional skepticism. So there's no one standard that is called professional skepticism, because professional skepticism is a concept. It's something that are characteristics that the auditor should bring to the audit. So you'll see it, for example, talked about in the risk assessment standards. You'll see it talked about in the standard for fraud, the auditor's responsibility with respect to fraud in the financial statement, SAS 99. You'll see it throughout the standards. The PCAOB is very focused on professional skepticism, which is we should highlight how important it is. That if you look at some of the PCAOB reports that they've issued after auditing the auditors, they talk a lot about professional skepticism, and that the auditors did not demonstrate a sufficient level of professional skepticism. You'll see that type of wording sufficient. They weren't skeptical enough. That type of thing. Right? You'll see that in those reports. And so one of the ways, how do you think you can measure professional skepticism? Because it's not going to be a box that auditors take off. How do you think you can measure it? Right, that's independence.
Well, I guess you have to measure certain variables, like maybe how long the auditor takes to report the solution, and he's verifying, he or she is verifying it properly. You might also want to check basically what resources he or she uses.
And so the point is that it's difficult, right? And so you tend to use proxies. And so when the PCAOB is coming in when they audit the auditors and they look at the auditors' work papers and the conclusions that the auditors reach, they will be looking at different factors that might suggest to them, the PCAOB investigators, that the auditors weren't skeptical. But there's an important distinction. To measure whether or not the auditors are skeptical, we could try to come up with different types of proxies, where there's been research that's demonstrated that time pressure negatively impacts skeptical judgment. Obviously, knowledge and expertise in particular, the complexity of an area, the subjectivity of a particular accounting transaction could negatively impact skeptical judgment. But a key distinction that you want to make, it's not enough to just be skeptical. You want to see that auditors, once they're skeptical, they take skeptical action, right? So there's an action as a result of that skepticism. So what you don't know by looking at the PCAOB reports is you don't really know if it's that auditors were not skeptical and so they missed something, or they were skeptical but didn't act on that skepticism. So which do you think is more problematic?
Not acting on it?
Right. Similar to with independence, if it's one thing if you don't uncover something, that's probably a training or knowledge, and you could, train people to deal with those types of issues. But it's a whole other thing if you recognize something and you don't act on it, right? You don't address that issue. So let's take a look at the case. So you should have read the case by now. And I want you to break up into informal groups here this evening and answer these 5 questions about the case. Identify how will the auditor show professional skepticism? What conditions might he have done if he had not been, what might he have done if he wasn't exhibiting professional skepticism? independent? Did he violate his independence? Why not? What kind of pressures did he face? Remember when we talked about judgment, that pressures can impede professional skepticism, and what alternatives existed for him. So why don't you take about 15 minutes to discuss that. You just jot down notes, you don't have to write out any formal. And make sure that there's going to be someone to talk about professional skepticism. So here's a case where Will is on his first job by himself, leading the job. Small job. So what kind of examples did you identify that suggested Will was being professionally skeptical? Yes.
Well, when he ended up going and analyzing the bills, he analyzed the name, the receipt books, and then he actually looked at the date of when it was reported versus the date of the bill, which was the year after.
Mm-hmm.
So.
Yep. Yes.
How would you ask his boss?
Speak up.
When he was talking to his boss about how that's his best friend's voice.
Okay.
Like precautionary asking the boss.
Okay, well, I might argue that that's Will being demonstrating ethical kind of bearing, right? Because he wanted to make sure, being responsible, that, to make sure that making sure that he wasn't violating any independence issues. So yeah, that's more of him showing integrity, right? Yes.
It says he called his boss 2 times over the past 4 days. He was checking to make sure his boss agrees what he's doing.
So he was kind of taking, again, looking for checking, so showing professional judgment, right? Because by checking with someone, running it by somebody else, he was showing professional judgment. What else? Anything else? So we talked about how he looked at, I'm sorry.
I was going to say, what about the ink?
Right. Right. That, the ink was different. Anything else? Right. So there are several examples in here where he showed professional skepticism. So for example, and here's, this is Will making a critical assessment of the evidence. There's no audit program that tells you to check the ink and make sure that the ink on the 2 documents that you're comparing agrees. There's nothing that says look at the date on the dollar bill and see if that date matches the date that was recorded. There's nothing that, the other thing that he noticed is that they were brand new bills. Right? That when you consider that this, the bills were nice and crisp, given the type of, parking or something like that, how likely is it that all the bills are going to be nice and crisp, like someone just came from the bank? And so again, he was making a critical assessment of the evidence to, because things didn't make sense to him. What was his initial? What made him initially kind of skeptical?
Yes. Was it the percent missing from the document study or signatures missing?
Well, remember they said they had some control issues in the past, right? What did he do? How did he get the information? Magically appear on his desk. Right, he approached Jess about it, right? He's running audit. There were discrepancies, the signatures were missing, so he inquired about it. And when he inquired about it with Jess, what was he had a certain feeling, an intuition.
He said she wouldn't mind if he just stayed out of her way.
Right, he noticed that there was a difference in her demeanor. And he could make that assessment because he actually had a personal relationship with her outside of work, so he could make that assessment. Right? that's another thing about professionals. So here's a situation where you would think that Will would walk in trusting, you know, because he knew Jess, he knows her from, you know, a close personal relationship with her husband. He's, you know, they entertain together, so he probably walked in there trusting her, but he didn't allow that trust to impede his audit, right? Or his judgment, impede his judgment, I should say. Trust but verify. Okay. Anything else? Well, what might have limited his skepticism? Question number 2. Let's get some other people involved. Everybody read the case. Yes.
He could have accepted the explanation Jeff gave him about where the money went. Like it felt between the walls. He could have just accepted that and moved on.
And why would he have done that? What was the conditions that would have allowed him or motivated him or incentivized him to do that?
If he wasn't skeptical, then he would have walked in with this mentality that I trust this person.
Right, so his relationship with Jess is a condition, or his relationship with her husband. This was her best friend. Yes.
The fact that his evidence was right in front of him, so he didn't have to really, if he just trusted him, he wouldn't have to.
Right, when she gave him an explanation that was plausible, it was a plausible explanation because we knew that they had control issues in the past. Yes.
At first, the evidence that he was looking at was also very insignificant. I think it was only $320 worth, and whereas the materiality for the company, I think, was $5,000.
Right.
So that was a big thing. In addition to his personal relationship with Jess and everything, like that's a big factor.
Right. Excellent. Right. His relationship, the fact that it was immaterial, it's $320. Remember, we talked about materiality. So here's a situation where it's quantitatively immaterial, right? I think we'll say that $320 is not significant, especially if you set materiality at $5,000, right? But because Will suspected that there was something going on, or he wasn't really comfortable with the documentation or evidence that he was seeing, he had to go beyond that, right? He couldn't be constrained by the fact that it was only $320. So what else? There's some other conditions that existed. What about the directions that the partner gave him? Was that in any way a potential impediment to him being skeptical? Right. He was concerned about, you know, time. The partner was like, we'll get this audit done. We don't want to blow the budget or anything like that. Time pressure, remember we talked about that in professional judgment. Time pressure can impede your judgment, negatively impact your judgment. What else about the job? Did he have any concerns about his performance?
Was his first charge or something?
Right, it was his first in charge assignment. He wanted to do well, right? And yeah, you measure how well you do by not only you don't want to go over budget, right? You want to make sure that you're bringing issues to the partner that are substantive issues, and that you want to impress upon the partner that you know what you're talking about, right? So all of those, him being concerned about those types of things could have impeded his skeptical approach to the audit. So you think Will was independent? Yes? Why? Here's the situation. So, what's independence and appearance?
That means you don't have a close relationship with the client.
Well, it means you don't have investment and a covered member or a close relative, right? So remember the conditions. Rule 101 was a covered member or a close relationship such as the person's spouse, person's parents, siblings. So just none of those. Your cousin isn't even a close relationship.
And I also think that Jeff's position is not finding out clear if there's any issue. She's an assisting clerk, and if anything, it's the police help. I think control issues that occur when the whole share.
Right. So here's a situation. But what did Will do that would suggest, okay, I understand what you're saying, that, well, this is his best friend's wife, so, right? But what did he do up front that would, I would suggest, mitigated mitigated him, you know, possibly appearing to be impair his independence? What did he do right up front? He spoke with the partner about the fact that that Jess was his personal, you know, he had a relationship with Jess with her husband, that they were friends, they socialized together, right? So he did exactly what he was supposed to do. He alerted the partner, you know, this is a relation, this person is a friend of mine. The partner, and at that point, the partner in charge of the engagement had made the decision as to whether or not he thought that Will, you know, would not be able to would impair his independence by being on that engagement. But let's say he did alert the partner. Do you still think that he would have impaired his independence by just because Jess was his friend? Regardless of what the standard says. Do you think that's right for impairing? Like if you had an audit, you're on an audit engagement and you are auditing and your friend is the financial, you know, she's in the financial reporting department, and she's responsible for financial statement analysis, let's say. Your good friend from college.
And because you kind of have that motivating factor of not trying to like throw your friend under the bus, especially if you're really good friends with them. So even though it's not a close relative or a covered member, you still have that, I guess, bias. You know, you're not going in and gonna give like a clean opinion.
Well, you're not giving the opinion, right? You're not giving the opinion. You would have to alert the partner, right? And then the partner says to you, like, okay, well that's not a Rule 101 violation. Then what do you say? Not just picking on you, anybody. What would you say? You'd say, okay, is that what you're gonna say? Okay, but if I bias myself, I'll bias myself. How would you, if the partner said to you, well, that's not a Rule 101 violation, you can do this audit. Are you gonna be comfortable doing the audit?
Maybe ask his suggestions on what
I would say, as the partner, you have a professional obligation to conduct this audit with a mindset of skepticism, due professional care, and independence. That's your professional responsibility as an auditor. That's what I would say. Because what you're saying, and you have to be honest, and if you really, really believe like, well, I can't do this, not that I would want to, but I don't want to put myself in that position, and you have to be honest, right? You have to be honest and say, look, this is a really good friend of mine, and I prefer not to be on this engagement. But it's not a violation of independence. What you're basically saying is, I don't think I can be independent in fact. I think my personal relationship with my friend is going to cause me to not make a decision in the best interest of the engagement. So, how do you think that might go over? Some of you've interned, right? Yes, no? You've interned at public accounting firms? No, no one? So how, given the environment at the firm that you interned at, how do you think that would go?
They're gonna look at you and be like, wow, you really can't keep it together and get the audit done. Even though, like, I've already told her she's independent. So, everything, I feel like, everything within the public accounting world is like politics. You can't, like, burn yourself because work is around. And then, not specifically burn yourself, but, like, you always have to make sure you take care of, like, your image and how you come across to people, especially the partners.
Right. Well, that's true of any environment, right? But the reality, I guess I'm just, you know, my students have answered this question the same way, honestly, because you do see yourself having, you know, close personal relationships with them, and you can make that decision. So maybe if it was just an acquaintance that you happen to be in this class with, that you know, it might not. But if it's a close personal friend that you have a really strong relationship with, then you might find that you're not able to be independent, or you might make excuses for that person. And that's important to know about yourself, right? Because you don't want to put yourself in a position where you can't make an independent, unbiased decision that could, but you have to realize there's a consequence to that, because what you're saying is, you know, you could have a situation where the firm would appreciate that kind of honesty, or you could have a situation where they would say, well, you're a professional. You have to practice, you know, our expectation is that you have, remember, there's also in the standards, we didn't cover these in detail, but objectivity and integrity. And who manages your integrity? You, right? So you could, you know, the firm could, you know, someone could look at it that way and say, well, you know, what if you find yourself in another situation where you're on an engagement, and then you're on that engagement working, and over the course of time, you develop a close relationship with the client. And not anything that's, you know, romantic or anything like that, or you're traveling together, but just you like the person. They're good natured. When you're there, you have lunch, you know, that kind of stuff. You just like the person. So then what? So you know, that could be, so you have to think about the consequences of it. But the point I'm trying to make is that it's your responsibility to manage, as professionals, to manage your, you know, your responsibilities as a public accountant, and manage those types of relationships. And then you have to also think, you know, what if you're it's one thing if you're the partner in the engagement. What if you're the staff person on the engagement, or the senior on the engagement? Somebody comes in and reviews your work and then finds out that you identified something but never documented it. You might really like your friend, but at the cost of your career, you don't want to throw your friend under the bus. But it is a difficult decision. So most times you probably won't ever have to be hopefully faced with that when you're in a situation where you're, you know, having to report on a friend or work in an environment where you have a close personal friend. But, you know, that's when you talk about professional ethics too. What are your responsibilities as a professional? Okay, so Will didn't impair his independence. What he could have impaired his independence and mental attitude if he did not act on what he found, right? If he found something and said, oh, I'm gonna give this person the benefit of the doubt because I know Jess, you know, we have such a good time together, then he could have impaired his independence in fact. But he did not impair his independence in appearance. Okay. So I think we already talked about the pressures that he faced. He had time pressures. He also had the pressure of what? Dealing with his best friend's wife. And when he realized that, you know, that Jess was probably involved in a fraud, then that's the pressure. How do you tell that to your best friend? How could you be responsible for putting your best friend behind bars? But is he responsible for that? No. Right. That creates, you know, that's a secret that, because you're now social, right? So in most cases, you know, we could, you know, you could go home and not feel any obligation because it is confidential, it's work. But now in this situation, Will and Jess and his wife and his best friend, they all socialize together. So here he is sitting on all this information that impacts somebody that his wife is also friendly with, right? So, yeah, that's the question. So what alternatives did Will have once he realized what Jess was doing? What could he have done? Talk about something.
He could have just not do anything.
Right, and what's the consequence of that? Right, he would have impaired his independence. And what if it comes out that, you know, before subsequently is discovered and Will didn't do anything about it? They find out that he will just lose his job, right? What is all that?
He would be like suspended or something of that nature.
Right, if they found out he could, the firm would probably fire him. Right, they know that he found out, hid it because of his relationship. Because now that's an ethics issue, right?
He also could have confronted her.
Right. What's the consequence of that?
She was out there.
Okay, so let's say he confronted her and she stopped doing it, then what? Right, he still has an obligation, right? He found something, and he followed up with skeptical action. So now if he does not report that, then he's a part of it, right? He's a part of the cover-up. Right. Would you want your friend to have that? Then you're like, why are you putting me in this position? Right, so, okay. Any questions about this? So here's a case where Will was skeptical and he acted on that skepticism, right? By taking it to its full conclusion. Right? He did the right thing by alerting the partner right away once he got enough information to be able to suggest to the partner that, you know what, I think this is misappropriation of assets, and the partner, they pursued it and turned the information over to the client. The other key takeaway is the fact that it's $320 is irrelevant. When we talk about materiality next week, we will cover this, but fraud, if it's a fraud, it's material. Right? Because you don't know the extent of it until you investigate it. So you can't say that it's immaterial. You don't know the extent. Right. Let's just wrap up here with professional skepticism. So just some case facts. So SEC enforcement actions against auditors between 1987 and 1997. They cited that 71% of the cases, auditors failed to exhibit professional skepticism or maintain an attitude of professional skepticism. The PCOB, which is more recent than this last study was done, obviously, during their first 4 years of the inspections, they noted a number of deficiencies which they attributed to a lack of professional skepticism on the part of the auditors with respect to performing their audit procedures and their audit tests. So we talked a bit about some of these when we talked about professional judgment. So just the fact that of the auditor-client relationship, that implicitly that allows for biases that auditors have to guard against. And we talked about this when we talked about the judgment framework. When you're familiar with someone, you believe that person's going to act in a certain kind of way. You have certain expectations about how that person is going to act. So you're probably not as distrustful of a person you know that you're familiar with than if it's a total stranger. I would suggest that when you start out on an audit client, right, that you don't know, you're new to the audit client, that you probably, maybe your skepticism is higher, right, because you don't know. But as you start to get to know that client or the people that you're interacting with on that client, you have to guard against your skepticism being, not being as skeptical because you know the person. So you're like, this person is so nice, they won't do that. So you have to be aware of that. So again, personal connections can create greater biases. And that, and Casey mentioned this, we talked about the auditor-client relationship. So it's not, the auditors have incentives, clients have incentives. So when we talk about skepticism and auditing, some of the studies that we've seen that have been conducted examining auditor skepticism, and there are different proxies for skepticism. Some studies have seeded errors, determine whether or not the auditors were able to identify those errors, and then if and when they identify those errors, whether or not how they responded to those errors in terms of the audit procedures that they would perform. So most auditors are very willing to think skeptically and test. So they've got, for the most part, I think auditors, because of the standards and because of training, auditors know that they're supposed to think skeptically. They're willing, they also believe, though, what the research has shown is that questioning and confronting clients are more problematic. So that's the action, right? That's responding to your skepticism. We saw this, Will didn't allow to stop it, but one of his concerns was the time pressure, right? To be able to complete the audit on time. So sometimes it's seen as killing efficiency, and you don't want to, so this will be trying to be very careful before accusing Jess of committing a fraud, right? So you don't want to seem as though you're being distrustful of the person and really taking aim at their integrity. Auditors also sometimes perceive skepticism as being suspicious, and so as a result of that, they don't want to think that way because, again, you have a client relationship, and so that's an important relationship. You're taught in a firm. You don't want to do things that would impede, negatively impact your client relationships, right? So you always try to maintain a good relationship with your client. Okay, but as auditors, we have to think skeptically, and that, again, trust but verify. Neither assume that management is guilty, but don't assume that management is not guilty. Right? Suspend your judgment until you have evidence to support your judgment. Again, just in terms of audit levels, what the research has shown is that audit staff, so people like yourself going into your first few audit engagements, are most willing to confront. Why do you think that might be? How about you guys with the intern? Were you on any engagements? How did you feel about, not necessarily questioning the client? Did you feel intimidated or uncomfortable with it? Yes, no?
I mean, it could go one of those ways. Like, as an intern, you obviously want to give that good impression. So if you do uncover something, you feel that it's your obligation to tell them, because if it is a problem, it's like, okay, they did their due diligence, So I feel like that's why that when you're like, I guess, down in food chain and not high up, it's not that, you don't feel as bad because you don't even have a relationship to begin with the client. So, but it's like, I'm just going to do my job. So.
Right. And what's also really important, I think you said this, hinted at it when you first year. What's important to you when you're first year on the job? Well, learning, yes. That's right. That's it. But what else? Building a relationship with the audit. But you want to make a good impression, though. Right? You want to come off like you know what you're talking about, that you've done, you are a person, they didn't make a mistake in hiring. So other people who intern or people who, work, how have you ever had situations on your jobs where, thing is, seniors are much less willing to confront but become more willing in high risk of fraud situations. Right? So when it's fraud, when it's a high fraud risk, it's almost like you're like, okay, I can't ignore this, right? Because this is high fraud risk and I have all this evidence to suggest that this is a big issue. Right? So they're more willing to confront that situation as opposed to when it's not a high fraud risk situation. Managers are uniformly less willing to confront, and particularly so when the risk of fraud is high. So what's the difference between managers and they're both auditors. They both have the same professional responsibility. What's different? What do you think? Are managers just more on that? Are they just not that in tune? What do you think? What's the difference between an audit manager and an audit senior, other than experience? Exactly. Right? Managers have more client-based time. They're also closer to, thinking about being separate partnership. They also have great concerns about client retention. Client retention is going to fall more on an audit manager than it is going to fall on an audit senior. So there are a lot of factors that might inhibit them acting on their skeptical judgment. Partners are sensitive to fraud motivations, except in situations where the client is very important to the firm, for fees and referrals and that kind of goes without saying. So basically what this research is telling us is that auditors have to be, at all levels, have to be mindful of, professional skepticism and the importance that it